to start on the independent auditor's report. So the big thing with the auditor's report is you'll see under the first section, opinion, we have issued a clean, unmodified opinion this year. That's the best opinion we can give. There are no issues noted. The rest of it, this is just a boilerplate standard report, but that's the big thing to be concerned with. That it is a clean, unmodified opinion. One thing I do want to point out in the back, government auditing standards do require us to issue an independent auditor's report on internal control over financial reporting. That starts on page 11, but the only thing I want to touch on with that is that there are no material weaknesses or significant deficiencies in internal control, which is a good thing. So with that, I'm going to turn to
What you're saying
page
is the same
3.
thing we've done every year.
Yep, no changes.
There's
Still all good.
no changes.
All good news. So page 3, I'll kind of run you through some of the numbers and some of the changes from 23 to 24. So we'll start with the cash. The cash was down $438,000 from year to year, mainly due to just some more expenses this year, and that largely due to that $397 in accounts receivable. So there, I believe we'll run through it a little more in depth on footnote 3, but there was some grant money spent, about 1.6, but the land bank had only received 1.3, so you're still waiting on roughly $400,000 in receivable there. Moving down into the accounts payable, other liabilities, these are just timing of the payments of the expenses. So you incurred the expenses at the end of the year, but they weren't paid until 2025. Ending 24, you had almost about $2 million in net position, which is a very healthy amount that we like to see at the land banks. Excuse me. Moving on to page 4, statement of activities. This will show your breakdown of revenue and expenses comparative to year. You'll see the large jump in government grants up to 1.7 from roughly 600,000. We'll go a little more in depth into that footnote 3 again. The other number 2 I want to jump into is the property sales. You'll see that was down. 2023 there were 3 properties sold. 24 there was only 1 property sold, so that's the reason for the decrease there. Moving down into expenses, you see the big number. Demolition and renovation increased just due to additional projects ongoing with the land bank. That was up about $800,000. A change in net assets was down $120,000 this year. There is still a healthy amount in there. That's one thing I do want to touch on. It was a little bit of a down year compared to the last year, but there still is a healthy amount of net position in there. Moving on to page 5. So the statement of cash flow, this will show how the cash changed from year to year. You'll see the beginning is the change in net assets, and the 3 accounts payable, accounts receivable, other liabilities. Those are the change from year to year in your balance sheet numbers, leaving you with the net cash decrease of $438,000. Still a healthy amount of cash of 1.7. Moving into the footnotes, page 6. Footnote 1 is a summary of significant accounting policies. Really no change or no new policies or any standards that were implemented. But I do want to touch on 1D, cash and equivalents. I know it says there 24 and 23, the corporation had 1.6 and 1.9 respectively in excess of federal insured limits. I know Steve and Tanya got in touch with me today, provided me the collateral statement. So that footnote is going to change for the final financial statements, and that will read something to the effect of the cash balances at 24 and 23 are fully insured. Moving on to page 9. Page 9 is, I briefly touched on it, but this will be the breakdown of your grants by funding source. So we'll look at 24, County of Schenectady and New York State Housing Trust Fund. You'll see how we get that $370,000 in accounts receivable. The grants received from New York State Housing Trust Fund was 1.3. The revenue recognized, 1.6, almost 1.7. That is the money actually spent that was submitted for reimbursement, leaving you with $370,000 that's owed to the land bank. Footnote 4, this is just a breakout of your functional expenses. So it's all your expenses broken into program services and support services and management general activities. With that, I'll turn it back to you guys if you have any questions. On our end, it was a pretty standard year, nothing really out of the ordinary, clean opinion. If you have any questions or any concerns, feel free.
So what is that, about 8% spent on support services, administrative management, that type of thing?
Yep.
10% would be, 193,000 or 160,000, so that's, I would assume, a very good figure.
Yes, yeah,
And compared to.
that's the number we like to see there.
Yeah, compared with other operations.
Yes,
And just raising that because that's publicity.
Yeah.
Figure that we can use is that we're way, we're well down. And what we
Right.
spend in administrative activities.
correct.
Yeah, I read this over quite some time ago when you first gave it to Steve, and as the treasurer, I had no questions, everything was crystal clear.
All right.
Right, yeah, I mean, it's, like I said, on our end, it was a standard year, there was nothing out of the ordinary. Steve and Tanya do a great job running everything and getting us everything we need in a timely manner, so no
Michael,
real issues or concerns on our end to raise.
Michael, just one more question on page 5, was the cash equivalents. What was the, of the beginning here, what was the change in the language on that cash equivalent? Beginning of the year, on page 5, what was the,
Yep, I can actually tell you, I already made the change. Wait 1 second, I had the full financial here. So that last sentence, starting at December 31st, 2024.
What page are you on?
He's on page 5, not page 6.
Oh, I'm sorry. page five.
yeah, I was on page 5, I was questioning the cash and equivalents at the beginning of the year, you were gonna change the language on that.
No, change it on 6. The last
No.
paragraph on 6.
Page 6.
This is the
Oh,
paragraph.
yeah,
that's
yeah,
gonna
got it,
change.
okay, got it, thank you, Michael.
Yeah, no problem. So that will, just for clarification, that will read, I actually have the actual change in front of me. It will read, at December 31st, 2024 and 2023, the corporation had no amounts in excess of federally insured limits. Basically stating that there were no uninsured cash holdings.
And how are we insuring them?
It's a collateralized letter of, can you describe that to me? I mean, you looked at it, it's with M&T Bank, they have a collateralized note or?
Yeah, so essentially how that works is the federal government insures deposits up to $250,000. So obviously you have more than that. So what the bank will do is they'll enter into collateral agreements, basically insuring your money, your deposits over $250,000. So if by happenstance the banks collapse, you would still get your full money, not just $250,000.
Is there a cost to that?
I don't know if there is a cost to that. I've never seen a cost associated with that.
No, there is not a cost to that.
We get our money spent, happy to be saying, on the float.
Happy to have that. All right, is there any other
Anybody,
questions?
any other questions on this? Then I'll entertain a motion to approve the audit report and pass it on to the board as the draft with a note that there is a language change at the bottom of page 6. Do I hear a motion?
A motion to approve?
Second? And all in favor?
Aye.
Any opposed? The motion carries. Michael, thank you very much.
Thank you very much.
So you get
Have
that,
a good day.
so you'll get that back to us, or back to me, probably tomorrow, right?
Yep, so what I'll do is I will send you the management rep letter, probably right now. I'll just shoot that over to you in email. Just need you to sign it, send it back to me, and then we'll get you the final financial statements tomorrow with that change reflected on page 6.
Perfect. I can get it online. Thank you.
Yep, perfect, thank you.
All right, great.
Have a good day.
Have a nice day.
Thank you, Michael. Yep, bye.
Do I just hit the live here, or do you do that there?
What you missed is when this started out before you came in. Steve was saying, well, we should be done within half an hour. I said 15 minutes, we're done at 8, 9, rather.